Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, the catastrophic destruction caused by the Chennai floods has once again highlighted our helplessness in the wake of nature. There is a general perception that home insurance doesn't cover damages caused by the acts of God. Now, this may have been the case earlier, but today even the most standard home insurance packages cover the definition called acts of God in India. Today, we will be discussing about home insurance plans in detail and also find out why you must consider including it in your insurance portfolio. Let's welcome Yashish Dhaya. Welcome, Yashish, to the show. Now, tell me, let's start with, the ABC of home insurance. Why do you think it's so important?
Home is the biggest asset you've got. It's your house, all the belongings in it. If something happens to it, whether it be a flood or an earthquake or a natural damage or whether it be damage because of malicious intent, whether it's theft, whether it's something breaks, all of that is covered in home insurance. So I think I lived for about 15 years in the UK. It's compulsory there. You cannot have a house without home insurance because even though you may not want to put your house back in order, if their thinking is if a house breaks down and the owner can't put it back in order, it spoils the look of the entire colony because the entire colony has a certain look. So it is compulsory for you, even if you don't want it, it's compulsory to have home insurance. Of course, here I barely know, very few people have home insurance here. That's why it's necessary. It's your biggest asset. So you insure your car, which is usually not even 1/10 the price of your home. And
the car depreciates all the time.
And the car depreciates and the home appreciates. So it's a pretty obvious one that the home does need to be insured. And it's a very low cost. Like the cost of a home insurance would be roughly about the same as the cost of a car, while the car is costing you about 1/10 or actually less than the cost of a car. So, yeah, of course, it's necessary.
So what are some of the options that people have? Of course, we've seen massive, natural destruction. We saw it in Srinagar. We've seen it in Chennai. It's become a part of modern day life where homes are destroyed, cars are destroyed. So what are the options and how should one plan for a good home insurance cover?
So if you look at it from a global perspective, India has had over the last 50 or 100 years, one of the lowest amounts of home destruction by natural calamities. I know we've had Uttarakhand, we've had Kashmir, Jammu and Kashmir, and now we've had the Chennai floods. These are all in the last 7-8 years that they have happened, and they are in recent memory. But India historically, if you look at countries like the US, houses are destroyed pretty routinely, and catastrophic and flood cover, etc., is a pretty big cover there. So I think as far as the customer is concerned, first thing is to decide that you want home insurance cover. Once they want home insurance cover, then they go out and get it. And there are, of course, two kinds of cover that you need. One is for the structure that you wish to protect, because should there be a flood, and structure is usually against natural calamities. So whether it be a flood or whether it be any other natural disaster. We've seen three floods recently, but we also had the earthquake earlier. So you protect the structure, and the second is something called a contents cover, where you essentially cover the contents of your house, whether that be a television, whether that be a jewelry, whether that be a table, whether that be even some amount of cash is covered under contents. And the content coverage is not that somebody's television gets spoiled because of wear and tear. That is not covered. But if it gets damaged or it gets stolen or it gets broken because of various situations, then it is covered. And that is when the insurance company will pay the claim.
So how does one go about an insurance cover, a home insurance cover? Because there are a lot of complexities. People rent apartments. There are apartment buildings now, and a lot of people are now staying in those. You've got individual plots. So how does one look at all these permutation combinations?
Sure. So it's a very, let's talk about homeowners first. You can be a homeowner of two kinds of home properties. One is, a property which is built on your own land, you own the land, you own the property. Now, in that situation, suppose a natural calamity was to happen. The natural calamity may last 2 months, 3 months, 2 weeks, 2 days. The structure could get destroyed, but the land is still there. So essentially what you cover is the cost of reconstruction of your building, whatever that cost is. So, you may buy, let's say somebody goes and buys a house in Greater Noida for 2 crore rupees, but the land cost is 1.5 crores. So that means the structure is 50 lakhs. So you basically get the 50 lakh rupees structure covered. And hence, if the structure gets destroyed, you would receive the 50 lakh rupees from the insurance company to rebuild that structure. You don't need to get your land insured, because that after the 2-3 weeks of destruction, it will be back again where it is, and you can build again on that, right? Now, if you are, on the other hand, you are living in an apartment. If you're living in an apartment, usually you wouldn't take out a single cover for your own home structure. You would all get together as a society, and the society would take out an insurance cover for the entire building.
And is that a practice that is being undertaken by people?
Not very often.
It's not a compulsory that you have to do that?
No, in some states it is. So I know in Maharashtra it is compulsory. I believe in Himachal also it is compulsory.
So that a small, very small proportion
two states have
of the
made it
number.
compulsory for housing societies to take out a structural insurance cover. But there is really no reason why Gurgaon shouldn't have it, or Noida shouldn't have it, or any other part of. See, the problem with not having it compulsory for housing societies to purchase home insurance is that you may buy a home insurance for your flat, but if the flat above you breaks and the flat below you breaks, and they are not in a position to put that back in order, you really can't put your flat back in order. But at the same time, you would receive that money, which is required to build that building again. And so home insurance is necessary, whether you buy it on land or whether you buy it. Now, if you are renting a property, of course, you don't need to take out insurance on your own, because, if a problem happens, you just move out. But the contents inside the house are yours. And you want to make sure that those are covered, whether against a flood, whether against, we saw some of the pictures where, unfortunately, and I had some friends also in Chennai, unfortunately, the people are living there, and, up to 3 stories.
Amazing.
There is water.
Amazing level of destruction.
Yeah. So if you had a wooden dining table and that stayed under water for 2 days, it's going to be quite unusable after that, or, something else. So all the electronics would have got destroyed, because imagine if your television is submersed in water for a period of 3-4 days, there's not going to be much left of the television.
Precisely.
So clearly all of those pieces have got destroyed, and whether you were the home owner or whether you were the person renting it out, in fact more if you were the person renting it out, you have to get contents cover. Now, in terms of what are the options, how do you kind of go about purchasing this, is fairly straightforward.
So there's no real complexity, because a lot of people have this mental block where they say, it's probably going to be very difficult getting
5 minutes.
home insurance.
5 minutes is what it gets you to home insurance. So quicker than we have spent explaining this concept, it will take you to purchase the home insurance. You just go online, simple questions are asked. What is the size of your flat? Most people know 1,000 feet, 2,000 feet.
So does one need to submit floor plans and certificates of construction and all that?
Nothing. You basically need to say, this is my house, this is the square feet of my house, these are the contents in the house. I have got 7 lakh rupees of furniture, I have got 3 lakh rupees of electronics, I have got 2 lakh rupees of jewelry. Jewelry can't be more than 10% of everything you're getting covered, because there's fraudulent practices that can happen otherwise. So basically you list it out, you get a price, you make your payment, and your policy will come to you, period. The policy may take 2 days, it may take 2 months.
And what is the general range? Of course, you can't give a definite answer to that, but what is the general range that we're looking at in terms of the cost?
So if you're looking at about a 10 lakh rupee cover for various things in the house, typically I'm looking at somebody's house, there'll be between 2 lakhs to 10 lakh rupees of stuff, because a single television, refrigerator, air conditioners, house content. So let's say 10 lakh rupees will cost about 5,000 rupees on an annual basis. So about 400 rupees per month is going to be the cost of covering about 10 lakh rupees. So it's not exorbitantly expensive, specifically given how I think what
how
one
much
is looking
you
at
stand to lose in many ways.
If things do go wrong, and the second part, I see the other side of it. So let's forget even natural disasters for a moment, right? Of course, we've seen the couple of natural disasters. I see people worried. What if somebody comes and steals things? What if somebody comes and does this? Arey Baba, let them come and steal. You've got insurance. Of course, you make the usual precautions, you lock your house and all, but sleep peacefully. If the person comes and picks up your laptop and goes away, which earlier we used to hear in Delhi, all those gangs and all doing all those kind of things. Of course, the police is supposed to stop them and all that stuff, but that's kind of, you're talking about perfection. So if they come and steal, let them steal. You are insured. You will get your money. Of course, you don't have to kind of be brave and try and stop them or whatever. So I think one can sleep peacefully.
So let's talk about the claims process, both during normalcy or normal times and calamities. Now IRDAI gives statements every time there is a natural calamity, or sometimes they do that, saying that the claims process will be relaxed. So how does that work for insurance companies?
Yeah. So I'll come to that. So normal claim process is, if something is lost or something is damaged, you submit a claim form and you explain what the damage is. In some cases, and you have to check beforehand. Certain companies ask for bills of those things. Certain companies ask for declarations that you had made of what all you had purchased. And structural damage is structural damage, so anybody can come and see it. A surveyor will come, they will assess the structural damage, they will agree how much needs to be paid. And if you're not happy with that, you can go to the ombudsman, you can kind of, obviously write to the insurance company, go to the IRDA.
So that's a pretty comprehensive
there's a pretty comprehensive process around it, and most of the system is pro-consumer. So, that's just the way it is. Most of the system is pro-consumer, so most of the law systems will. Now, what starts happening when you have natural disasters is there are two pieces. The insurance companies obviously face a big loss. When something like a Chennai happens, any company with a large exposure to Chennai would have a larger loss than the others. So they have something called reinsurance, and they have catastrophic reinsurance. So if, for example, now the Chennai situation has been declared
so basically what you're saying is insurance companies actually reinsure themselves.
They reinsure themselves for catastrophes, right? So now that Chennai has been declared a catastrophe, the moment it's declared a catastrophe, beyond a certain amount of payout is then paid by the reinsurance companies. These are the likes of the GIC and some of the other you've been listening, some of the reinsurers getting into India. So these people will then pay those claims, and these are global organizations. They are playing it all over the world. So for them it's normal. Every year something or the other is happening in some part of the world. So they are paying these claims, and that's what they kind of charge their fees for. Now, so IRDAI would in situations of calamity where a lot of people are affected, they will come out with statements to make the process faster and ask companies to respond faster. That is to put pressure on the companies to make sure that they act fast on these claims and resolve them quickly, so that it doesn't become a public disaster or a PR disaster in any way, and people are genuinely helped out. So I think it's all positive. In fact, if it's a big catastrophe, the claims process is usually easier than it would be if there isn't really a catastrophe and if it's just a single claim.
What about exclusions as far as home insurance goes? What kind of exclusions are there?
So there are exclusions, and those exclusions are really related to basically there's a clause that is supposed to take care of things, right? So if you have contents home insurance, then you have to declare if you're going to leave the home for longer than 90 days. You can travel up to 90 days, no problem. So you can go on your holiday, you can go abroad 1 month, 2 months, that's fine. But if you're away for more than 90 days, then there are chances that you can have a damage. So you then need to consider who's going to take care of the house in that time. Is somebody going to come and check it out, etc. Also, reporting can become a problem because a theft may happen and you're reporting it 2 months later. So, all the verification, etc. becomes difficult. So travel is one big exclusion. The second part is cash and jewelry. They can get excluded up to beyond a certain limit. So most people would allow cash and jewelry up to 10% of your sum assured. So if you have a 10 lakh rupee cover, 1 lakh rupees could be jewelry out of that. You cannot have a 10 lakh rupee cover in which 9 lakh rupees is jewelry. Because, there are very few records of jewelry in this country. Things can just, you could just say it's gone while it's not gone. And it'll be very hard to prove whether it's actually gone or not gone. So those kind of things do have a lot more tighter handling. Some companies also have restrictions in terms of what percentage can be furniture, what percentage can be electronics. Those are kind of exclusions that you would usually have. Now, most companies now have started covering things like terrorism and earthquakes. They have been covering for some time.
Yeah, we talked about acts of God.
So earthquake is now covered by about 60% of the companies. About 40% still have exclusion for earthquake. So you should see what is excluded. And so this is when you're kind of buying structural products.
So that becomes important.
That becomes important because an earthquake could lead to a flood, and that will then become a consequent event. So it starts becoming legality. So it's better to take something which does not have the exclusions up front. So you purchase a product which does not have the. Similarly with the terrorist events, etc. They are very, very infrequent, and they have a very limited impact on insurance. And of course, one should take a policy which just says that those are also covered.
Right, Yashish. Well, we have to take a short break. When we come back, we're going to be taking your questions. But you can write to us at queries@policybazaar.com. And we'll see you shortly. I'm Arjun Bhagat, and we are taking your questions, and answering them is Yashish Dhaya. And we've got Shakshi, who writes, my mother is 58 years old. Please suggest medical insurance for her. Would a sum insured of rupees 3 lakhs be enough to meet her medical requirements?
So, Sakshi, your mother should have taken a policy beforehand. I'm assuming that she is well and does not have any major disease, because she would have to undertake a medical at that age. Beyond 45, most companies insist on medicals, and after 55, it's compulsory. Everybody insists on medicals after 55. So at 58, she would have to undergo medicals. My suggestion would be, go for the largest cover you can afford. Of course, it totally depends on what you can afford. From a tax perspective, your mother can get tax relief up to about 25,000 rupees on having purchased the insurance. So up to 25,000 rupees, if you can spend that, whatever cover she can get is worth it. I would say take as much as possible, because honestly, there is no way for us to tell what is the maximum cover we require. What we can talk about is how much are we willing to spend on our own. So in the US, it's, for example, it is illegal to sell any limited cover whatsoever. So every cover has to be unlimited. So I would say maybe about a 5 to 6 lakh rupee cover is perhaps, if you have to give a rule of thumb, a 5 to 6 lakh rupee cover is perhaps right. And at her age, she should be able to receive that in less than 25,000 rupees. So maybe that is something you should go for. If you're looking for something cheaper, then of course you have to kind of manage your budget and see what's right. But there's a tax break on the 25K. So 30% tax break. So 7,500 rupees will come back to whoever pays that amount.
Right, Yashish. We've got Pratyaksh, and he asks between additional health insurance plans and critical illness plan, which one is better for a 38-year-old?
Okay. So, see, health insurance plans and critical illness plans are fairly different in nature. Critical illness plans take care of those critical illnesses like cancer, heart disease, etc., etc. There are about 35 of them. Usually, what one tries to do is take a much larger critical illness plan and take a base health plan, maybe up to 5, 6, 7 lakhs. But beyond that, go for a critical illness plan. So that's really the difference. A base health plan will cover normal hospitalization. So it would cover if somebody had dengue and had to go to hospital and stay there for 3 days, that would be covered by your base health plan, but that will not be covered by a critical illness plan. However, if somebody had, some kind of brain surgery or a serious, bout of cancer where they had to go through multiple chemos, etc., then it's the critical illness plan that would come in far more handy. So that's the pros and cons between the two. And, I think both of them have their space. So I would suggest if you are purchasing, buy a base health plan, maybe about 5, 6 lakh rupees cover, and then take about a 10 lakh rupee critical illness plan on top of that.
Right, Yashish, we've got Samar, and he asks, his query is, I recently purchased a Honda Jazz. My car dealer got me motor insurance from Bajaj, and I have opted for zero depreciation and engine protector add-ons for now. Is there any other rider that I should consider including?
No, I think you got a pretty good plan with the engine protector and the zero dep, and it's a brand new car. I think that's perfectly fine. I usually do not advise people going for the no claims bonus protection, although there is of course a no claims bonus protection, and there is of course further add-ons like lock and key protection, etc. But they're not very major. I think if you're driving around now, well, floods have started happening anywhere, but during the rains, earlier Delhi used to get flooded quite a bit for cars, and if you're driving about in the monsoon, I think the engine protector is very important. That's a good plan to have, I would say.
Right, we've got Sonali, and she says, I'm confused about child insurance plans. Does it insure the parent or the child, and how do they really work?
Okay. A child insurance plan is meant to save up resources for your children when they grow up. So when they grow up, they have access to that capital, so they can use it for their education, or you could use it for their marriage, or you could use that for starting a business, or you could just use it as participating in your investment towards their early adult years. Who is covered in this? The person who purchases the plan, as in the person who is covered, the person who purchases the plan, usually the parent, usually the earning member is covered in this plan. And the reason for that is that in case the earning member is not there, then this plan needs to survive, and whatever is planned, so suppose you've planned to get 50 lakh rupees or 30 lakh rupees at the end of this plan, must be provided. And because the earning member is not there, the earning member does not have the ability to pay the claims, to pay the premiums, and hence these policies usually have something called waiver of premium. That's the speciality of a child plan, the waiver of premium. So the premiums will get waived, but the money and the amounts will be protected for the children all the way till they turn of age, and they will receive those funds. There is no way that you could take these funds earlier or waste them or anything of that sort.
Thanks, Ashish. That's all the time that we have on this episode. But last week we asked you a question, what does NAV stand for? And the correct answer is net asset value. Net asset value, and the winner is Abhishek Sharma. Congratulations. Now this week's question is, what does home insurance policy cover? A, the structure only, B, content only, C, both. And that's all the time that we have. But do write to us at queries@policybazaar.com, and we'll see you next time with another episode.